ahora la palabra al presidente de la asociación.
Gracias, Gregorio. Thank you very much to everyone. And welcome to the 25th AMF Classic Annual Convention already. Let me first thanks very much to our sponsors, Santander, BBVA, Crédit Agricole, and Seca Bank, for their extraordinary support for our event. Let me also thanks very much to Mr. Klaas, Governor until the past June of the Netherlands Bank, to accept our invitation, and also to Mr. José Luis Escrivá, the Governor of the Bank of Spain, for introducing him. Very briefly, as you know, AMF is an association whose most important objective are the transparency and liquidity of the financial markets. In this sense, I would like to remark simply one of the challenges that Europe, and obviously Spain, have at this moment to achieve by October 27th the shortening settlement T+1. Many actions are underway, but with some difficulties related with the securities financial transactions, SFTs, a large portion of the repo market, for example, is expected to shift to same-day T+0 settlement. This also means that netting opportunities are significantly reduced. It's a problem. It's only an example, but has to be solved around extensive discussions with the relevant market infrastructures. As this is understandable, a major change obviously in the markets. However, the discussions continue on this what exactly solution should be. The objective is to reach an agreement by the end of November, which is the target date for all open discussions to conclude ahead of finalizing the roadmap. This is only one example, as I was saying, among many others that I will not discuss here, of course, don't worry. I do want to make clear our concern, just to make clear our concern, that about implementation date is chosen, or rather forced, and the competitive consequences with other markets. Are we going to be competitive on that date? Don't we think about establishing new attractions to the European stock exchanges are a priority to maintain these 2 years of disadvantage compared to American stock exchange markets? Do we have to delay the financial transaction tax in Europe, temporarily at least, to attract? That's a question for the audience, and probably most of us have different opinions about it, but sure, we are concerned. And now that's all. And now please let me help me to receive the Governor of the Bank of Spain, Mr. José Luis Escrivá Belmonte, to introduce our guest speaker. Thank you very much.
Good morning, everyone. It's a great pleasure for me to introduce today to Klaas, an outstanding central banker. And I have also the privilege to see over time how his status that is now well recognized among central banking community has grown over time, because Klaas became governor just more or less at the same time I started working as a senior official at the BIS in early 2012. In the BIS, in the bi-monthly meetings, there is probably the most important meeting is the so-called June meeting, where basically in a composition of G20 plus governors meet every 2 months. And in 2012, the composition of that group was absolutely impressive in terms of the seniority and quality of the governors. It was presided by the governor of the Bank of England. Mario Draghi was, at that time, the president of the ECB. Mark Carney was, at that time, the current Prime Minister of Canada was the governor of the Bank of Canada. Ben Bernanke was the chairman of the Fed. Shirakawa was the governor of the Bank of Japan. Chu was the governor of the People's Bank of China, but Raghu Rajan, the Nobel Prize, was the governor of the Central Bank of India. Agustín Carstens was the governor of the Mexican Central Bank. Darman was the impressive figure, was the president of the Singapore Monetary Authority, etc. Christine Lagarde used to attend the meetings because at that time was the managing director of the IMF, I recall well. Okay, among this group, I was a senior staff just witnessing the discussion of all these luminaries. And then, at that time, joined a young in age, but also in seniority, governor from not-so-core central country of the G20, the Netherlands, that was Klaas. So Klaas, and I tell you, managed to gain so rapidly the respect and the attention of all these very senior governors, so experienced governors, and he did so because he always, from the very beginning, I remember, was able to make statements full of good judgment, balanced, with all rigor in terms of analysis. And it was pretty obvious at that time, in 2011 and 2012. Actually, only some years later, his colleagues asked him to become the president of the Financial Stability Board. So in addition of being 14 years president of the Netherlands Bank, Klaas over the last 5 years has been also the president of the Financial Stability Board, and I think it's very telling. So it was for me a privilege when I joined the Governing Council of the ECB just 1 year ago to come back and to see again to Klaas Noot. And then I realized that what it was already a very promising central banker 12, 13 years ago was already a person in the Governing Council with a high status, really a benchmark, a consensus builder, and clearly a reference to all of us. That's the reason I'm so pleased and so proud to be able to introduce today to Klaas Noot. The floor is yours.
Well, thank you very much for this kind introduction. It's almost impossible now to meet sort of the expectations, but that is also a thought that came to my mind when I saw this wonderful venue, this spectacular venue. And well, in case you worried that I would make cheap jokes about casinos and financial markets, let me assure you that I don't see any resemblance between the two whatsoever. Jose Luis, you were so nice to recount my start in the Governing Council and the BIS in 2011. But I wanted to start here today by actually recounting an episode that was already a bit earlier. And when I say to people, what do you think were the 48 craziest hours of my career so far? Then people tend to think, well, that was, of course, the debt crisis and your time in the Governing Council. No, it was not. It was already in early October 2008, when it was a few weeks after the collapse of Lehman, and I found myself cruising the streets of Brussels, where I was part of a delegation of the Ministry of Finance that was involved in crisis management meetings to prevent the imminent collapse of Fortis, which was the former Belgian-Dutch financial conglomerate, and those meetings ultimately led to the nationalization of ABN AMRO and Fortis. And why do I recount this today? Because it was a moment of total disarray. There was absolutely no plan for a situation like this. We did not have the appropriate legal instruments. And the existing framework that was there for information sharing and policy coordination between home and host supervisors was flawed, to put it mildly. And there was also no pre-arranged plan for funding in resolution. And I remember that once the agreement was struck about the nationalization of the Dutch parts of Fortis and ABN AMRO, the Dutch state treasury had to go to the market, literally overnight, to find 50 billion euros. And that was needed to secure funding for Fortis Bank Netherlands at that time. But 50 billion euros overnight, that was 1/5 of the total public debt that was outstanding in the Netherlands. So I could go on, and this, of course, could easily have become our European Lehman moment. And that was a moment that afterward we vowed to never repeat. So after the financial crisis, that was the conviction. That was the conviction that leaders from the G20, the 20 largest nations in the world, had. They had all gone through such fateful crisis days, and at their meeting in Pittsburgh, they decided on a massive strengthening of the regulation of the financial system to address the weaknesses in the global financial system and to curb excessive risk-taking. And they endorsed also, in doing so, the mandate of the Financial Stability Board, the newly established Financial Stability Board, to coordinate and to monitor progress in this area. And the rest, I could say, is history. In the years afterwards, we saw a strong push for tighter regulation and supervision of the banking sector, and the Financial Stability Board's financial reform agenda, together with that of the Basel Committee on banking supervision, laid the groundwork between, let's say, 2010 and 2016. And it actually worked. It actually worked because banks were transformed from shock amplifier in the global financial crisis 2008-09 to shock absorbers in the periods of financial turmoil that we saw by 2020 and beyond. Banks played a very important role in cushioning the economic shock from the COVID pandemic by continuing to extend credit. And without it, I'm convinced that the COVID crisis would have been far worse. So yes, the post-Lehman reforms paid off, but they're also unfinished history. It's an unfinished history, first of all, because, of course, new risks have come up. And we have to implement new regulation in order to also deal with these new risks. But in the meantime, we also have to protect the progress that we already made in making the banking sector safer. And we have to do all of this while adapting to a geopolitical climate that has radically changed. So, the three words in my speech: implement, protect, adapt. Let's start with implementation. Partly as a response to strengthening banking regulation, non-bank financial institutions are now playing a much larger role in financing the real economy than before, to the extent that they are now accounting for roughly half of all global financial assets. And this is what I, on earlier occasions, have referred to as a sort of waterbed effect. You push on one end of the bed, and then, of course, risks migrate and will pop up on the other side. And as we've seen over the past few years, structural vulnerabilities in the NBFI sector also have the potential to cause systemic risk. The dash for cash during the onset of the COVID pandemic, the commodity market turmoil following Russia's barbaric invasion of Ukraine, the failure of Archegos capital management in March 2021, and the market volatility recently associated with the trade tariff announcements. In each of these cases, parts of the non-bank financial sector played a central role in amplifying the stress. And in some of them, central banks therefore had to intervene to support market functioning and to keep the supply of credit to the real economy flowing. Now, don't get me wrong here. Also, the NBFI space brings real benefits. NBFIs offer a diversified source of funding, and they also offer much-needed competition for the banks. But of course, they also bring new vulnerabilities with them, liquidity mismatches. the inability of some market players to prepare for them, leverage, and growing interconnectedness with the banks. If we look, for instance, at the recent Bank of England's systemic liquidity stress test, it showed that over 90% of the liquidity demand spikes under stress stem from margin calls. Now, it's not that NBFI isn't regulated, but historically, regulation of this sector has focused on investor protection, on market integrity, and on other mandates. But these don't fully capture systemic risk. So we also need a financial stability lens here. During my time at the helm of the FSB, I emphasized that we must restore the level playing field here. But we must not do so by weakening banks' resilience. We must do so by strengthening the resilience of NBFIs to match that of the banks. And also here, I believe we made progress. Our work has included policy recommendations to enhance money market fund resilience, to address structural liquidity mismatch in open-ended funds, and to enhance liquidity preparedness for margin calls. And earlier this year, the FSB delivered policy recommendations to the G20 to address financial stability risks arising from leverage in NBFI. So now the focus should be on implementation, because that is the thing that unfortunately is still lacking in many jurisdictions. And that means that authorities must not only put our recommendations into national law and regulations, but they must also have the capacity to operationalize them. And let's be clear, we can't just copy-paste banking rules onto the NBFI sector. For that, it's too diverse and it's too different from banks. Bank resilience means something entirely different than NBFI resilience. And the best way to strengthen banks' resilience is through strengthening its solvency and by containing credit risks. With NBFI, the main route is through containing and managing the inevitable liquidity mismatch between assets and liabilities. So this asks for different approaches. But our goal, in my view, should be clear: a level playing field across the financial system. Not by weakening the bank rules, but by strengthening the resilience of the non-bank sector. But regulation obviously can never be the entire story. We also need better data. There is a reason why the non-bank sector was formerly called the shadow banking sector, because it's inherently opaque. There are data gaps, and those gaps mean that we often don't see the vulnerabilities until it's too late. The quality and timeliness of non-bank data are not only essential for identifying vulnerabilities and for designing effective policies. We also need better data for counterparty risk management and market discipline to function properly. We must address these data challenges. We can't keep relying on crisis to reveal what we should have seen coming. Now, when it comes to NBFI, people always tend to think about insurance companies, about money market funds, about open-ended funds, etc. But there are still two other areas, recently emerging areas, I would say, of non-bank finance that are also potential sources of financial stability risk. And here I refer to private credit and to stablecoins. First, private credit. It offers tailor-made solutions for often complex financing needs. But its inherent lack of transparency poses risks, and it makes the product less suitable for retail investors. Also, the surge in private lending is very recent, and it has not yet weathered a downturn in the credit cycle. We all know that banks have special recovery departments for distressed assets, the so-called fallen angels. But what about private credit providers? I fear that today they have little experience with workout procedures. And that, of course, then raises the risk of pro-cyclical lending curbs and perhaps even asset sales. So we strengthened the banks to counteract procyclicality, but are we now letting it sneak back in through the side door? Okay, then there are stablecoins. Also, they clearly meet a need. In emerging markets, for instance, they offer fast, cheap, and accessible cross-border payments. In advanced economies, they are driving the digitalization of payments, especially where tokenized deposits haven't taken off yet. But there are also risks here, obviously. Despite their name, stablecoins are not always stable, and they pose additional risks to the core of the financial system due to the way in which their reserves are being managed. Conceptually, a stablecoin is quite similar to a money market fund. And in both cases, redemption pressures are ultimately driven by perceptions about the quality of the underlying assets. The history of the regulation of money market funds has taught us that such constructs are susceptible to panics and runs. And in the case of stablecoins, this might be fueled by their inherent opacity. Such turmoil could then easily spill over to fire sales on global bond markets and to wider financial instability. A report by Moody's suggests that the largest 25 fiat-backed stablecoins de-pegged more than 600 times only in 2023. Just to show that this is not a hypothetical risk. Moreover, as many of these stablecoins have close linked to the crypto asset sector, stablecoins could also become a key channel through which risks spill over from the inherently volatile crypto sector. Of course, we are not going to stop the growth of stablecoins. So in order for the market to be able to grow sustainably and to contain financial stability risks, we must regulate it, globally and in a coordinated way. And just as with money market funds, regulation should focus on these mismatches. And as I just discussed, money market regulation has not been foolproof, but frankly, I don't see a better alternative. Also here, I have a concern about implementation. The Financial Stability Board has set guidelines for the contours of these global rules for stablecoins and crypto assets. And in the EU, we have now fully implemented the FSB's guidelines in the MiCAR. But it is worrying that so many other jurisdictions have not yet done so, especially given the inherently cross-border nature of stablecoins and the fact that they continue to rise sharply, especially US dollar-denominated stablecoins. So we really need to work together here, because if we don't, what we risk is a race to the bottom, where crypto dealers and stablecoin issuers might be located in the least regulated regions, but spark problems elsewhere. And as we then reach the bottom, I fear it will turn out that the bottom will have a cellar, and that if we look really closely, that the cellar will have a basement, and we don't know where we will land. So implementation of regulation is really key. Regulations alone don't reduce systemic risk, but implementation does. We should be worried about the broadly perceived weakening of commitment to implement agreed reforms, because without timely and consistent implementation, the resilience of the financial system will be undermined, leaving it vulnerable to future shocks. Now, in the meantime, next to implementation of new reforms, we also need to protect the strengthening of the regulation that we have already achieved. Let me explain. During my tenure as FSB chair, we witnessed something unprecedented: the failure of a global, systemically important bank. The demise of Credit Suisse, which is what I'm referring to, together with the failure of 3 US regional banks, was a stark reminder that bank failures are not a relic of the past. It brought lessons for banks and for financial authorities. In some areas, our work to make the banking sector more resilient proved not to be complete yet. Take, for instance, the Basel III, the final Basel III standards. These are designed to strengthen resilience of the banks, to withstand losses. And yet, they still have not been implemented in many jurisdictions. The Credit Suisse case also highlighted that more than 15 years after the global financial crisis, authorities still face challenges in dealing with failing banks. At the same time, more than 15 years after my 48 hours in Brussels, we are hearing familiar calls again for deregulation, but also calls for simplification. And let me be clear, these two things, in my view, are not the same. I do understand the desire to simplify. Banking regulation and supervision has become overly complex. I acknowledge that. Over the past 15 years, a great deal of regulation has been introduced from various angles: global, EU, national, micro, macro. New risks have been added. Old risks have rarely been removed. There is overlap, there is friction. And yes, sometimes there's also a lack of supervisory proportionality, particularly when it comes to smaller institutions. And these are all subjects that I believe are worth looking into. But deregulation, that's a different story. Deregulation effectively means lowering buffers by relaxing the rules. And that would reduce resilience in the banking system, and it might increase the likelihood again of future financial crises. So I believe we cannot afford to undo the progress that we have made, especially now, not now in this time of exceptionally high uncertainty, both on the economic and on the political front. In my view, that would be a mistake. So to summarize what I said until now, we have to implement what we have agreed, and we have to protect what we already achieved. And that brings me to my final and third point, and that is the necessity to adapt to the increasing geo-economic and regulatory fragmentation. Because fragmentation not only impacts the economy, it not only impacts inflation, it also has consequences for financial stability. A lot of it has already been said about it, but I would add that perhaps the most important way in which fragmentation impacts financial stability is when we can no longer find each other, when we are faced with these crucial cross-border challenges. And that is because I believe that the most important challenges to financial stability today are precisely these cross-border issues that we can only solve if we work together. And there are many such challenges. During the global financial crisis, policymakers around the world were able to swiftly and effectively respond. And that was possible in part because of the good relations among public sector financial decision makers, but also because of the solid institutional structures that had been forged over the years. In a fragmented world, such a swift response would become far more complicated. And this could actually prove rather costly. Now, for central banks, for institutions like the FSB, the IMF, the World Bank, and others, geo-economic and regulatory fragmentation is to a large extent a given. The world economic order has moved, unfortunately, from multilateralism in the direction toward what I would call transactionalism, and I don't think that it will change back anytime soon. So we have no choice but to adapt to the new situation, and of course the central question is then, how? Well, I think our main task will be to try to limit the economic cost of the current global political climate as much as we can. In a way, damage control. For instance, by continuing to speak up for the international financial rules-based order that has brought us so much stability and prosperity over the decades. By pointing to the economic and social costs of protectionist and fragmenting policy. And by staying committed to constructive international working relationships so that the international financial regulatory community can continue to operate a framework an international regulatory framework as effectively as possible. And in order to succeed, we may have to look into new solutions sometimes, new ways of working together. Now, in a way, this reminds me of the story of Don Quixote, the famous novel by Miguel de Cervantes. I worked a little bit on my pronunciation on the way in. Because in the first part of the book, Don Quixote does not see the world for what it is and prefers to imagine that he's living out a story of knights and honor. But towards the end of the book, his spirit declines from illusion to reality. Perhaps we, here in this room, the international financial community, perhaps we, just like Don Quixote, we still have some work to do to come to terms with the hard reality of today's geopolitics and have to adapt accordingly and continue our efforts to provide stability in an uncertain world. I thank you for your attention.
En su intervención nos ha dejado muy claro que simplificación y desregulación no son lo mismo. Ya en el campo concreto de la simplificación y referida sobre todo al sector bancario, ¿qué áreas cree usted que serían más propicias a una cierta simplificación?
Well, thank you very much for this question. Look, and I want to begin by making a general remark in the sense that I think in every business, even if you run a commercial company, if you have one division or one business line that for 15 years has been growing like crazy and has only had wind in the sails, etc., I think in every business then at some point the CEO will want to think, okay, has all this growth really gone into the right directions, or has there also been some sort of excessive growth in areas with hindsight that are not as successful as the other ones? I think that is also true for public institutions, like, for instance, a supervisory agency. So for 15 years, probably we've had the wind in our sails because the memories of the financial crisis made it that everybody supported much more regulation and more capital, better supervision and everything. If you now look at how the whole system operates, I think there is a lot of reporting requirements. That is the area that I would identify as number one. And these reporting requirements have typically been introduced at a time in which a specific risk was seen to be very, very, very topical, and we needed higher frequency reporting. But then over time, risks sort of become less relevant, but the reporting requirements always remain. And then there is a new risk coming up, and that brings new reporting requirements, etc. That's one area where I think some streamlining is on the order. Secondly, in Europe we have going concern capital and we have gone concern capital. So capital for supervision and keeping the bank alive, and capital for what if things go wrong and how can we then wind down the institution, minimizing the social costs, etc. Also that in Europe has become very complex and with all kinds of interactions. I would be much more in favor of having a clean break between the two and having separate requirements without all these interdependencies. Thirdly, and this may be a little bit provocative, I don't know whether you all like it, what I'm going to say is, but modeling, risk modeling. I tend to believe that we have created a bit of a parallel universe here where at the highest level of both the firm and the supervisory entity, if they have the conversation on what keeps you awake at night, what are your most important risks, etc., models never feature in that conversation. But both on the banking side and on the supervisory side, there has been investment in huge sort of departments to build the models on the banking side and to validate the models on the supervisory side. And I sometimes wonder if they don't really play a role that much in the deliberations of senior management and also not of the, let's say, the frontline supervisors, etc. Have we not also gone overboard there? And have we not just created a world for the capital number rather than for how a firm is actually being risk managed? And then finally, small institutions, proportionality. If you look, for instance, at the Pillar 2 requirements, they are only a small part of the overall capital requirements of the bank. But if you look at the amount of resources that both from the supervisory side and from the bank side goes into this Pillar 2, I think it's also a bit disproportional to the amount of capital that ultimately comes out of this process. So it's not really one area, but I think in all areas where we may have gone a little bit overboard and where I think there is some scope for streamlining.
Muchas gracias. Muy claro. Su intervención se ha centrado en el tema de la estabilidad financiera. Tengo alguna preguntita que hace referencia un poco de carácter general, además de política monetaria. Si no tiene inconveniente, dada su experiencia también en el Banco Central, el Banco de Holanda, le voy a hacer alguna pregunta si la puede, de tipo general. Dice, la innovación financiera, stablecoins, inteligencia artificial, etcétera, transforma el panorama financiero, el funcionamiento de los mercados. ¿Qué cambios implicará ello sobre la política monetaria? Más bien cambios en el marco de análisis, cambios en los instrumentos de la política monetaria.
Well, yes, I think in the sense that this will impact monetary transmission. So this will impact the way in which our policy rate transmits itself into the borrowing cost. I hear a terrible echo, but transmits itself into the borrowing cost that individual borrowers face in the economy. It makes also the concepts of money different. It changes the concepts of money. It makes them less stable, more volatile. If people go in and out of stable coins and use stable coins to make payments, then of course the demand for money becomes less stable and less of an anchor for monetary policy. But I think the most important thing is that we work from a broad concept of financing conditions or financial conditions. And of course, if there is innovation in the financial system that leads to other forms of payments and other forms of financial instruments, then also that concept of financing conditions that we used, well, I should say, used in past tense because I'm no longer part of it, but that are being used in Frankfurt, etc., to gauge the tightness or the easiness of the monetary stance. That I think will have to develop with it.
Venga, muchas gracias. Otra pregunta. ¿Cómo mejoramos la transparencia y la valoración del private equity y del private debt que está distribuyendo, lo ha mencionado también en relación con la private equity, cada vez más a los clientes minoristas, al retail? No. Transparencia y valoración.
Yeah, this is actually a very good question, because the question is whether the market really lends itself for this form of transparency, because private credit, of course, started with a strong focus on, let's say, what was the middle market. Smaller loans, etc., typically are provided by the banks, and then you have bank supervision that also challenges, let's say, the credit quality, etc. The very, very large credits, they tend to go to the public capital markets, but then they have all these requirements on them where you need to disclose a lot of financial innovation so that participants in public capital markets can actually assess your own creditworthiness. But private credit was always a little bit in between. That was for the firms where there was no transparency, but then again, the only investors were professional investors that were deemed to be able, in a sort of bilateral relationship with the creditor, or with the debtor, to make sure that there was enough balance in that economic relationship and that the parties that invested in private credit were strong enough and had enough leverage to actually, on a counterparty bilateral basis, to get the data and to make the assessments, etc. I think it's a big, big question whether retail investors will ever be able to organize themselves, that they bring this leverage. So I think this is quite a worrisome development. If the development continues, then I think at some point there will be no alternative but for the regulators to demand from private creditors more and more information, disclosures, so that private, in fact, becomes quasi-public credit. So it is also, in a way, it could be self-defeating to go into the retail space, because it will mean bigger regulatory scrutiny and more demands on disclosures and transparency that typically this segment of the market wanted to avoid.
Muchas gracias. La siguiente pregunta también es un poquito más amplia. ¿Cuál es su visión sobre el presente y el futuro de la unión bancaria? Y en especial, también la pregunta se refiere a las fusiones transfronterizas.
Well, here I am quite disappointed, I must say. I mean, I had my own farewell only a few weeks ago, and Isabel Schnabel was one of the presenters on my farewell, and she showed a slide on the amount of banking assets in Euro area countries controlled by a bank that was headquartered in a different country. So as a sort of gauge for the amount of cross-border banking activity within the Euro area. In 2011, the number in the slide was 4 trillion euros. Today, it's 2.5 trillion euros. So we think that we have more banking union today than in 2011, and that is on the official side, because we centralized supervision, we created a single resolution mechanism, we still talk about a European Deposit Insurance Scheme. But in fact, on the ground, in the banking industry, we have less banking union today than was the case. And my explanation for that is basically, I think, related to the home host issues, that we still have a lot of host authority requirements that play a role, and that host authorities are unwilling to give up control over liquidity, capital within their jurisdiction. And that fragments. I just talked in my speech about fragmenting of the global economy, but even in Europe, we fragment ourselves by not having an internal banking market, by not having an internal market for services, by the way, in the broader sense than just banking. But that should be high on the agenda, also if we want to have a deeper capital markets union, because the banks will also be important players in the capital markets. So this is a worrisome development, and if we don't address it, I think we are doing ourselves a disfavor.
Muchas gracias. Una pregunta también un poquito más general. ¿Cómo ve los riesgos a la inflación y al crecimiento en la zona euro?
Well, this I should sort of say beforehand, that I'm no longer part of the latest development within the Governing Council, so I don't have the same information set anymore as I used to have. But I do look on the ECB website immediately after rate decisions and see what material they put out. And I actually completely agree with the assessment that was made last week in Florence, that the balance of risk at this moment is very even-handed. So at this moment, I think the ECB is in a very, very good place. I'm sorry to use the same words also here, but I mean, if you look at the projections, growth is essentially at potential. There's hardly any output gap. The labor market is better than it's ever been in the history of the monetary union. And inflation is roughly at target. And you can think about both scenarios with higher inflation or a disappointing decline in inflation, or scenarios with lower inflation. So at this moment, the risk balance is neutral, I would say. But I would put a warning, the world is very, very volatile. It looks a little bit like stability on a volcano, right? Because if you look outside, you have still trade wars, you have geopolitical conflict. So there is ample opportunity for shocks to disturb this very sort of stable situation. And therefore, I think the ECB rightly continues to emphasize the data dependency and the meeting by meeting, because in this world, you really cannot give any meaningful forward guidance. Be happy as long as you can take every decision every 6 weeks and take the right decisions. But don't pretend that you know how the world will be in 12 to 24 months, for instance, from now.
Muchas gracias. Las dos siguientes sí son más relacionadas al menos como lo voy a hacer con la habilidad financiera. Tema de titulización, que a raíz de la gran crisis, la crisis financiera de 2008, fue criticada por ciertos abusos, sobre todo en Estados Unidos. En Europa funcionó bien, al menos en este país no había ningún problema serio regulatorio. Hubo una cierta estigmatización de la titulización. Tengo entendido que en el Financial Stability Board ya estudió en profundidad el tema de la titulización. Su opinión es que puede ser claramente un instrumento financiero bueno, prudente y útil para sistemas financieros y sistemas económicos.
Oh, absolutely. I don't think that one should criticize the instrument per se. I do think in the run-up to the global financial crisis 2008-2009, the instrument was abused in the sense that if you do securitization, you create a little bit more distance between where the risk is originated and where the risk ultimately is held. If you do re-securitization, you create even more distance. So the risk that sort of in creating more and more distance, that some of the transparency and the assessment, the risk assessment capabilities will become worse and more difficult, etc. That risk is absolutely there. But with that, I would not disqualify the entire instrument. In 2008-2009, I do think there was a problem with opacity and sort of that the risks seemed to be much better than they were because people had lost sight over the risks. But that is, in my view, a wrong application of an instrument that in and of itself has value added because if a bank extends the loan, once the loan has been extended, the risk that remains is not necessarily a risk that sort of the bank can hold best. I mean, there can be other parties in the financial system that can hold the risk. If you take, for instance, a mortgage is a very, very long maturity asset. Well, if you have a bank that is particularly funded by sight deposits with a very short maturity, maybe that's a huge maturity mismatch. So securitizing these mortgages to an insurance company or a pension fund, which also has longer-term liabilities, has value in and of itself. Now, the one caveat that I want to make is that in Europe, a lot of attention seems to be going to the banking capital requirements for securitization. But that's a bit weird, because then you lower requirements from one bank buying the securitization of another bank. And I always thought that the value added of securitization was that actually you move risks out of the banking industry into the non-bank space. So that is the one question that I find always a bit weird, because if I remember the global financial crisis, it was also that banks were buying each other's securitizations, and one bank was buying the mortgage from the other, and the other was selling its mortgage to the one. And then you ask yourself, hey, is this just regulatory arbitrage, or is there a real economic risk transfer there? But if there is an economic real risk transfer, I do think securitization has value, and therefore it behooves us as a regulatory community to come up with a treatment that does justice to the economic risk, but that doesn't go overboard in terms of trying to prohibit or put the instrument in a bad light. That would be too much.
Muy perfecto, muchas gracias. A ver, en su intervención sí que ha hecho una referencia al mercado de repos. Yo no le voy a preguntar sobre repos, sino sobre préstamo de valores por parte de fondos de inversión, que en España tenemos recientemente aprobada una regulación aplicable sobre todo a los fondos más armonizados, los fondos UCITS. Desde el punto de vista de la estabilidad financiera, ¿ve que hay algún tipo especial de riesgo, más allá de, como ocurre siempre, necesidad de una regulación prudente en la figura en sí del préstamo de valores?
I must, admit that I'm not exactly aware what type of loan that...
Stock lending.
Stock lending, okay. So is it an instrument to take on more leverage and then to go deeper into the... Okay, yeah, there I think, of course, I mean, when are we talking about... let me take one step back. If people make risky investments, that's okay. I mean, that's part of life, right? No risk, no return, and so you want risk-taking in the economy, etc. And a risky investment, if that goes wrong, well, as long as it is equity invested and it's your own money and you can lose it, then it's too bad, but that's not a financial stability event. It becomes a financial stability event often when people make huge bets and risky investments based on borrowed money. which they will have to pay back. And that is usually a risk if there's too much leverage in these deals, in these sort of equity deals, that once the market goes down, you cannot pay back the loan anymore that you took out to finance these equity investments. That is a potential financial stability risk, because then you can have the cascading effect that you have to default on somebody who may also have borrowed the money, has to then default on somebody else, etc. So leverage in highly leveraged investments are sort of, that's what we as financial stability authorities should be attentive to. Not so much risky investments, but it is the funding that matters here. Now, I don't know the piece of legislation enough. I cannot imagine that there is not some sort of constraint in the legislation that this is sort of unlimited leverage would be allowed there. Then I would be a little bit concerned.
La última, 2 minutos. Holanda es el prototipo de país a la hora de establecer un sistema regulatorio de Twin Peaks. Mi pregunta es si, desde el punto de vista de la estabilidad financiera, ¿usted cree que hay algún tipo de modelo que pueda ser más favorable o más propicio a mantener un nivel alto de estabilidad financiera? ¿O los diferentes modelos de regulación, Twin Peaks, reguladores sectoriales, no tienen una incidencia clara en mayores niveles de estabilidad financiera?
Yeah, that is also a very good question and a very difficult one to answer. I think because different models have been tried and tested under different circumstances, and different countries have also opted for different models. Basically, you have 3 functions: the macroprudential or financial stability, the microprudential, and the conduct of business, the investor and consumer protection. Now, in the Netherlands, we have opted to combine the macroprudential and the microprudential and have a separate conduct of business authority. It worked for us. Will I therefore say that this should be the model and that this is superior for financial stability? No, I don't necessarily think so. I mean, the Netherlands is also a relatively small country where we have a relatively limited labor market, let me say, for professional economists and bank supervisors, etc. So it doesn't make sense to have 3 different authorities. And Australia, at some time, had the 3 different authorities, the central bank for financial stability, and a separate prudential authority, and a separate market conduct authority. The prudential authority suffered from the fact that it had huge difficulty in acquiring talented, high morale staff. Why? Because if people leave university, most economists, they either want to work for the central bank or they want to work for the Ministry of Finance. But very few people want to work for an authority that never hits the news, only when things go very wrong. But other than that, it's behind the scenes all the time. So in our case, it worked to combine these 2 roles because we attracted a lot of staff through the, let's say, the traditional central bank channels. And then over time, people wanted to diversify their knowledge and they moved into supervision. So for us, it was a good model to also keep well-qualified staff in supervision. There are, of course, other countries that have a much bigger labor market for professional economists that maybe could sustain separate authorities here. So I wouldn't say it's superior from per se in all circumstances. It worked for us. I think the Spanish model is not all that dissimilar from our model. I think it worked for you. But of course, we also had a banking crisis in 2008. You had a banking crisis as well. So no model, I think, is foolproof in that regard. Every model has its advantages and disadvantages. And the challenge is always to be very aware of where your vulnerabilities lie and to manage those vulnerabilities.
Muchísimas gracias. Muy clara la respuesta. Esta y las anteriores. Muchísimas gracias, señor. Nos hemos acabado, ¿no?
Thank you. Thank you.
Well, thank you very much for coming here today. We have an splendid guest invited. And thank you, Klaas, for being with us. And the governor are always our governor. So, Governor Not, thank you very much for coming here. And thank you very much as well, José Luis Escrivá, our governor. And I hope to see you next year because you are going to be the one who's going to talk. Thank you very much. Bye-bye. Merry Christmas.